Morning, Steve Freed in Chicago with the morning grain comments. Yesterday we had a pretty wild day, mostly in the beans when we were up 44 cents. This kind of followed a little bit of Friday's USDA numbers, but more importantly, over the weekend, the 2-week outlook for Argentina and Brazil weather has turned warm and dry. I think most crops down there would welcome 2 weeks of warm, dry. The question is this like last year when the dryness continued through the remainder of the growing season and they had poor crops? Or is the weather going to change back to normal? Our weather guide guess is by the end of January, especially Argentina and southern Brazil will be back to normal. Northwest Brazil is getting too much rain, slowing their harvest there, and so we're going to have to watch that also. Overnight, beans actually had a 30-cent range. We started out lower because we saw some deliveries on the Jan beans for the first time. But the news of China coming in and buying U.S. beans off the Pacific Northwest rallied beans 30 cents from its lows, and right now we're up about 14 cents at $14.29. The question in beans is, can we get closer to $15 in the old crop based on a normal South American crop? The USDA on Friday said we're going to get pretty tight in old crop U.S. beans. So I think the function of the market is to try to shift some of the demand from the United States to South America. Over in the corn, we're up a couple of cents. We're at $7.26 right now. The big question mark, where does old crop corn go? USDA gave us some food for thought as far as tighter old crop corn stocks and what the market thought. So do we go to $7.50? Do we go to $7.75? Do we go to $8 to try to slow this domestic demand? Probably a lot of it will have to do with the spring planting weather. And as far as wheat is concerned, we're up to about $7.72, a pretty good rally in the wheat market following corn. I think the market is maybe poised to go to $8. Some of this has to do with just some very low and conservative estimates of the Kansas and hard red winter wheat crop this year. On Friday, the USDA lowered winter wheat acres more than what the market had expected. So it puts more emphasis on weather and yields to have enough hard red winter wheat to satisfy demand. So maybe $8 in the nearby Chicago market is currently an objective of the market. Outside markets, you got commodities mostly lower, the dollar a little bit higher. Certainly talk out of Washington about concerns about the debt ceiling and also about corporate earnings after this year starting out with higher costs and taxes. As always, these are my thoughts and not those of ADM or ADM Investor Services. And have a safe and profitable trading day.
I know. I've been short for a period.